Hey everybody, this is Jim at SP500chart.com. It's about 4:10 p.m. on December 11th, 2013. Before we take a look at the S&P 500 chart, I just want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And please make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, we're starting out looking at a 30-minute chart. And, we gotta... What's a good way to put this? It's important to remain objective and to be open to all possibilities. And for the past couple of days, I've been saying that this looks like we could be forming a head and shoulders top. After yesterday's close, it looked more likely that we were forming a head and shoulders top. And today, we have a fully formed head and shoulders pattern that's missing just one thing. And that's the breaking of the neckline. Isn't it amazing how often we see here at SP500chart.com, how often we see the trading stop and pause at the end of the session on an important line, as if to tease us. Will we bounce or will we crash down through? Well, we have to be honest here. The odds favor we crash down through, and the reason is simple. Because we have three peaks, the third of which was not as high as the middle one, and that is a head and shoulders top. That doesn't mean it has to crash down through, but at this point you have to say the odds certainly favor that. Now, important to note that all of these patterns are not confirmed until the support line breaks. So this is a perfectly formed head and shoulders pattern except for one thing, and that is the breaking of the neckline. It's nicely symmetrical. We have 5 days on the left shoulder. We've got about 8 days on the head, and we got another 5 days on the right shoulder. Very symmetrical. We didn't quite complete our back test of this support line that broke back on the 3rd. However, close enough. I thought we might get a full back test, and if we did, I was thinking that might be a signal that we could be saved out of this pattern. But obviously, with the S&P down 20.5 points today, that back test ain't looking like so much a sure bet. At least a solid good touch as a back test doesn't look like it's going to happen. So, if we come crashing down through the neckline tomorrow, and we could bounce for a bit and then do it, but whenever it happens, and that is now the I would say probably 3-to-1 that this line breaks, and we confirm this pattern. We would then have a target. Since this neckline is very slightly sloping upwards, very, very slightly, we would be having a target of about 1746. Now, let me show you something that's kind of interesting. If we back out on a 2-hour chart, we've had this line right here that goes back for the last for 3 fairly significant tops. One of which occurred in May, the other one in early August, and then the third one in the latter part of September. We got above this line. We back tested it twice. So it will be interesting to see if this line offers any support, and that would be just a little bit above 1760. Now, if that happens, okay, let's just pretend here. Let's go back and look at it now on a 1-hour chart. If we were to break through our neckline and then bounce on this line somewhere around, well, let me be a little bit more specific. Let's say we were to bounce around, well, 1758 or so, thereabouts, 1758, 1760, something like that. If that were to happen, then we rally back and test our neckline up here, then we could be dealing with an even larger head and shoulders pattern that would look something probably along the scale of this size right here, where this would be the left shoulder, this would be the head, then we would maybe bounce, just hypothetically, bounce here, turn down around the 1783, 1784 area, then take this line out. We would be dealing with a more serious situation that would likely end up taking us down into the low 1700s, possibly even into the 1600s. And we have seen in the S&P patterns that looked a lot like this, where we would get, hold on just a second, there we go, there, that's better. We've seen this before where we would have a larger head and shoulders top where the head itself would be either a smaller head and shoulders, or in one case I remember it was almost a perfect little triple top. So this is just something that's forward looking. If this breaks and then we go down through this blue line, we've got a minimum target of 1746. If this blue line produces a bounce and then we get up into the low 1780s again and then take out this blue line, then we would be looking at a target here, minimum. By the way, when I talk about targets, they are always minimum targets. So if that were to happen in a fairly symmetrical fashion, then we would be looking at a target down around 1712 or so. That's a bit preliminary, but this is something that I think I've got to point out because we've seen it before. So, guys, right now the S&P is sitting on a precipice right here at 1782. I'd mentioned that the neckline was about 1778, and when we look at these lower candles here, I think that could be refined just a bit. I'm not sure why it looked like 1778 before, whether there was any data that was missing in the chart, but instead of this being a flat neckline, I'll just redraw it again from scratch to make sure. Yep, that looks like it's touching these 2 points here and here. We bounced ever just teeny bit, and that line is currently at more like 1780. So guys, let's watch that like a hawk tomorrow and see if we get a bounce here. If we do, then that's great, but you know, I think we got to call it the way it looks, and the odds-on situation is I would expect this line to break and for us to get down into the 1740s. So guys, bad news, not confirmed bad news, but it's not looking real good at this point. So it looks like the bears may have something to feast on here if we break this neckline. And like I said, odds, I think, certainly favor that taking place. I hate to say. So, guys, thanks for watching. I hope that you're prepared for this. I have some stops in some of my larger stocks that don't get yanked around too much by the market makers. And so, look, guys, thanks for watching. Take care. Be careful. Let's watch that neckline. And then if we get that bounce down a little lower, we may be dealing with an even bigger problem if you're a bull. Thanks for watching. Take care.